All right, good morning, everybody. This is Todd Mitchell. Tuesday, October 17th. We're doing something a little different today, okay? Instead of day trading the E-minis right now, I did a scan this morning, and I found a stock by the name of IPXL. Heck, I don't even know what they do. Impacts Laboratories, apparently. And it gapped lower, big time. Now, I had this on my radar on one of my algorithmic scans that I do every night. And let me just show you a daily chart. I had a buy at a particular level, and it gapped a lot lower than that, actually. And so I decided to not only take a swing trade in this, but I also decided to day trade it. And let me just show you the daily chart first, and then I'll show you where I'm long from. Well, actually, let me just skip ahead. I'm long from $17.15, so right where this middle white horizontal line is, okay? And I want to show you how I am going to trail this stop and how I'm going to work this trade in front of you. All right, here we are. We're on a daily chart right here, okay? And I had a buy coming into the day on a pullback at $19.60, right? This met one of my criteria for a swing trade. $19.60 would have been right in here. Saw that it gapped a lot lower, and so I decided let's day trade this. Okay, let's look for a correct setup on an intraday basis, the same way I like to look on the E-mini S&P 500. Okay, so that's what it looks like on a daily chart. Let's look at a 3 and a 10-minute chart. That's what you're looking at here. Okay, now I got out half of this position already. So look at the market gap lower, put in a low, watched it very closely. And as you can see down in here, I'm going to label 1, 2, and 3. Look at how the bars came down, retested the original 3-minute bar low here, and then consolidated and got an inside vertical bar right here. I love those inside vertical bars. Okay, so not only did we set up on a daily chart, right, and it came to me in a scan, but we got this set up on an intraday basis. So right at 9:42, look at this inside vertical bar. The bar started to contract. As soon as the market popped up through that high of 17, that's where I went long. So I actually went long. It got filled at 17.10 actually. So right where this white horizontal line is, 17.10. As soon as the market came up and retested the original 3-minute high of the day, at 17.35, I took half of my position off. So again, this is just a small little day trade. So again, with 1,000 shares, it adds up, right? So I took half the position off at 17.35 from a 17.10 entry rather. So that's 25 cents, right, on half the position. And I'm still long half of my position, 500 shares, right here. So this teal line right here, that's a 5-bar exponential moving average. Actually, it's a simple moving average, right? So I'm going to watch this very closely. If we get a close below this 5-bar simple, a close below it, if the next bar can take out the low of the bar that closes below the 5-bar simple, then I'll exit this trade, okay? So this is, in essence, a trailing stop, okay? Now, this is a big gap, right? This is where it closed the following yesterday, right? It opened way down in here. So when I see a gap of that magnitude, it tells me what the potential is. Okay. Now, am I saying that the market's going to completely fill that gap today? Probably not. But I wouldn't be surprised if we come back at least half of where we gapped, right? So let's measure from where it closed. Well, we'll just take it down to the low, okay? So essentially what we did was we measured from where it closed at about $20, roughly, down to the low of $16.80. So 50% would be in here, right? Even 40% would be right in here. But we're going to trail it, okay, above or on the 5-bar simple, okay? But again, a simple penetration through the 5 simple isn't good enough, right? I need to see a close below that level. So each bar, look at, right now is at $17.55. That's the value of the 5 simple. I need to see it close below it. Okay, then the following bar needs to take out that low. I'm going to follow this trade the whole way through with you, and so I'm going to pause it right. All right, we are watching this, and yes, we had a bearish candle, of course, right here, right? It's like a shooting star, right? Made a high, closed near the low. Next bar right here. So here we are. We have closed below the 5 simple, using that as a trailing stop, right? Look at this. So on this bar, so the 5 simple was 1759. We closed at 1755, so we actually closed below it. Let's see if we can take out that low of 1750. If we take out 1750 to the downside, we'll just exit this trade altogether. Okay, but this bar has to take out this low. So again, we're just giving it some wiggle room here, and we've got a sell stop below 1750. I like that because it's a round number. It's a half. So if we take out 1750, you trade down to 1749, we'd be out of this trade. And make what is that? 39 cents on the remaining contract, on the remaining portion of the position. So we'll just see. Let's just see if this holds. All right. Right there, 1750. Let's see if it breaks it, and there we go. So filled and out of that trade, and there you go. So not a bad trade, right? Just a small little trade on a small stock that, quite frankly, I don't even know what it does. But when you get situations like that, when you get a big gap in an overall trend, and it maybe hits one of your scans on a daily watch list, and it gaps like that, that is typically a really, really good trade. So that's why I wanted to get in front of you today and show you that. So again, we went long right down in here, took half profits right here on the retest of that first 3-minute high, and then took profits on the remainder as it broke up through, or broke down rather, through this low, because this low closed below the 5 simple. And I do like to use a 5 simple moving average when trading on stocks, on small intraday charts, even either a 10-minute or a 3-minute chart. That's what I like to use. All right, so the trade of the day, or for you to put on tomorrow if we don't rally too much in IPXL, would be a buy down in here. Okay, so we day traded it a little bit, made a little bit of money because of the big gap. Again, that's the reason for this trade. We not only set up based on my algorithmic scan to go long. Actually, I was supposed to go long right down in here, but we got a huge gap, so it actually filled me on the open at $17.35. So I'm actually long at $17.35 on the open, and day traded it, right? Remember, I went long at 17.10, out at 17.35, and 17.49 actually for just a small day trade. Made a few $100s on the day trade. Long at 17.35. Again, you're getting this email at night. So again, as long as we do not rally huge, look at, if you can get this tomorrow, Wednesday, between $17.45 and $17 right down in here, I think that's a good swing trade. Okay, again, we're still trading above that 200 simple moving average, and the overall trend is up. Heck, if you were to take it a step further and just measure from this low here, let's do some Fibonacci retracements from this low up to this high. Again, we've measured from this low down in here up to this high. Look at this, between the 30 and 50% retracement. Again, above that 200. All right, so there you go. Enjoy. Be back with you tomorrow. Bye for now.